today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. And then before I get into the support and resistance levels and how the market will be moving, I'm going to cover the economic calendar first. I highly encourage you to double check my latest videos on X and YouTube so you can find out the latest data overall, highly beneficial. And so for Tuesday, June 25th, 2024, at 7 a.m., we have Fed Gov Michelle Bowman's speech in London. At 9 a.m., we have S&P Case-Shiller Home Price Index for 20 cities. 10 a.m., we have consumer confidence. And at 12 p.m., we have Fed Gov Lisa Cook speech. Now, one thing highly to pay attention for this week is on Friday, June 28th, we have PCE inflation numbers. The reason why that's important is because the market is hoping for one interest rate cut this year, and the potential is either 1 or 0. The Fed's narrative is we're going to assess it when the data comes in and decide when we think we see fit to cut rates. Jerome Powell stated in the past 2 times, not necessarily the last speeches, but within the last 4 speeches 2 times, he mentioned that in his opinion, it's most likely that the next rate change, when it does come, will be more of a rate cut rather than a rate increase. But again, the narrative of the Fed is delaying basically the interest rate cut until they basically see that they're closer to their 2% target for inflation. Now, again, the PCE numbers are coming out on Friday, which is inflation numbers, and the Fed highly regards these numbers as more accurate versus the CPI and PPI inflation numbers. So that is important. Now, Treasury Secretary Janet Yellen told Yahoo Finance today that she does not see the basis for a U.S. recession and that she expects the Fed Reserve will hit its 2% inflation target by next year, a faster pace than projected by central bank policymakers. I do expect inflation to come down, and as we get into next year, I believe that the inflation will go back to the Fed's 2% target. All right, so you can see that inflation currently right now we're sitting at is 3.3%. Again, the Fed wants to get to 2%. So we'll see what happens overall. Now, in terms of the breakdown for the Dow Jones, it is actually pointing more to the upside. I'm going to go over the S&P 500 first, but I'm just going to go in terms of general sense. This is the Dow Jones. We've seen this channel with the upward trend resistance line dating back since 2021, support level since 2024 of April, and it's sticking with this channel. But again, somewhat potentially consolidating for the next trading day, potentially, but ultimately it looks like it wants to get to this upward trend resistance line. I will cover these levels soon, but just want to state the narrative that it's kind of pointing more to the upside. Now, for the Nasdaq and S&P 500, they're more pointing to the downside. Potentially not crazy drops for tomorrow, potentially, but ultimately they are pointing to the downside. And I'm basing these off of the MACD line. So for example, this MACD line indicates if it's a bearish or bullish movement. And in this case right here, you can see it's a bullish movement, potentially pointing to more upside, potentially. I wouldn't stay fixated on these because, for example, we see that the mega cap stocks, like for example, NVIDIA and all that stuff, they dictate the market more right now for the time being because they're in the trillion, like they're worth trillions of dollars. So if they have a really good day and they move up pretty well, they could carry other stocks, which ultimately not necessarily carries the market. Well, it carries the market, but for example, S&P 500, 97% of the market or S&P 500 could be down. But then if you have the top 3%, like heavy hitters moving up to the upside, the S&P will be in the positive, so making it look like the market is up relatively speaking, but even though the rest of the market is down. So there's that. So be aware of that. Don't fully get fixated on the MACD lines and then that thinking that the direction is 100% guaranteed, right? Now, first for the S&P 500, I'm going to look at SPY ETF for S&P 500, closed at $542.74, and was kind of moving close to the moving average right about here. So if we're heading down, I'm going to cover the downside first, and then I'm going to cover the upside. If the downside indication is correct, then we'll see support roughly about $540 and some change, which kind of coincides with right about here. We've seen like a little bit of drop / consolidation, not necessarily consolidation, but like support when every single time it drops around that price point. So 540 and some change. Will we see lower? I don't think necessarily for tomorrow personally, but if we do go lower, we could see support right here because there was a gap at $537 and some change, or potentially on the resistance level right about here, basically 535 and some change. The reason why I'm staying that 535, it gets that close to that moving average about 534 and some change. So there's that, which we saw major consolidation within 1, 2, 3 trading days, potentially 4 trading days. Not necessarily I wouldn't count that, but 3 3 trading days, about 534 and some change. Will we head lower? Potentially. I just don't think that's going to happen all within tomorrow's trading day. Again, highly encourage you to watch my latest videos on X and YouTube in case this is an out-to-date video. By the way, I apologize in advance. I'm going to try to zoom in as much as possible for one of the viewers. Thanks again for commenting, but I'll try to zoom in as much as I can within the video. Sorry about that. And then in terms of the upside, so for the upside, we have to pass this moving average first, about $545, which is possible, and then get to this price point right about here, which kind of coincides, if you could see. Basically, it acts as resistance and support across for the most part. So we've seen resistance and support, so that could be a possibility, and it's going to be difficult to pass, about $546 and some change. And then after that, we have resistance right about here, which we have a couple touch points. I think when I checked in the other charts, either 1 month or something like that, there was about 3 touch points, and that's roughly about $549 and some change. And then we have to pass the all-time high, which I don't think we're going to get to, but if we do, just in case, it's about 550 and some change. So that was recent. I guess it was pretty much in pre-market, the all-time high, which is about June 20th, 2024. And when we opened, it'd be pretty much around the same ballpark, give or take. So there's that for the S&P 500, SPY. Now for QQQ. QQQ did actually drop a little bit faster for today, and it went straight to the moving average as opposed to SPY/S&P 500. And again, this is QQQ ETF for Nasdaq. But yeah, this moving average was quite a bit of good support because we hit the moving average. Plus, you see these 2 drops right about here horizontally, pretty much around the same price point. So consolidation right about here, plus 2 bounces off of, plus moving average. So now the question is, where is it heading? If we're going based off the MAC lines indicating further downside, this red line right here that I've shown in the past in my previous videos is a line dating back since 2010. So I'm going to show it right now. Going back since 2010, acted as resistance and support. So I'm going to show it basically as much as I can. Upward trend resistance line, we saw multiple touch points, always stayed within the channel, basically had a breakout since 2020 to 2022 and acted as support as well. You can see right about here. And then we came back underneath it again and acted as resistance again, which was as of March 2024. And then here we did break out, and interesting enough, when we actually was basically breaking out, we consolidated first and then just had a massive leap up to the upside, and then basically heading back down. Now the question is, are we gonna, it basically was this massive false breakout, or are we gonna bounce off as support? Going off the MAC lines, technically basically looks like it's gonna break through it, to be honest. But again, you never know with the mega caps. They could just have a great day out of nowhere and it'll be a perfect timing, right? Like for example, just like spitballing, just a general idea, let's just say tomorrow we hold enough, we don't break through it, and then by the time the inflation number comes out, and the way the inflation number has been coming to the market, basically it almost seems like it does not matter, but it's constantly always like improving just enough where the market gets boosted again. So then we could just bounce off, like if we hold off till Friday and have good news hypothetically, bounce off to the upside, and then basically just keep going to the upside hypothetically, right? That is a possibility. And which would go against the MAC lines. And there's been multiple times we go against the MAC lines, so it wouldn't be a shock. Now, hypothetically, the first level we could see support, which would be, if you think this upward trend resistance line does hold true, which I think it does, dating back since 2010, that's multiple touch points, you're looking at support at $470 and some change. Right now we're at $473 and some change. But yeah, again, 470 as support potentially. Now, if we head lower, we could pretty much cross over to this consolidation price point, which you're looking at about $468 and some change. And then ultimately you come down here, which goes across this upward trend resistance line and consolidating price points right about here. So we could find support on the resistance level side, $465. Let me just zoom in a little bit closer, but 465 and some change, I think it was right about here. 465, 464. And then on the bottom side, about 461. I just don't think we'll hit 461 because it crosses over this upward trend resistance line. So let me just show a better zoom right about here. And there's a 6-month moving average, which coincides perfectly on that price point. So I'll show it either way. So we have this upward trend resistance line / support level dating back since November of 2023. You can see resistance here, support right here, support clean bounce right here, support, resistance right about here, and then like consolidating resistance somewhat here. But yeah, so if you think that this upward trend resistance line will hold true, kind of goes with the moving average right about here, plus a consolidation phase right about here. So this ballpark general price point of 464 to 462 and some change pretty much will hold us. I don't think we'll break through, especially since PCE numbers are going to be coming. With PCE numbers, again, inflation just seems like the narrative is constantly like we're improving. So if we're improving, the market gets excited that the rate cut could happen this year, and then just boosts up the market again. So that is a possibility. Again, by the way, I'm not a professional, so please do your own due diligence and research before buying and selling. This is all just my opinion. Now for the Dow Jones, the narrative based off the MACD line is to the upside as opposed to the Nasdaq and S&P. And again, this upward trend resistance line dating back since 2021 has one touch point here, two touch points right here, and then this one is two, but if you zoom into the 3 month, it breaks down to two specific each ones, which is a total of four, and an upward trend support level dating back since April 2024. Now, if you think the narrative of the MACD line is going to be true, where we're basically moving up to the upside, one sec, I'm on the drawing side, but if you think it's going to hold true, which I think it will, to be honest, because the way it's pretty much hit nonstop since 2021, it could hold, there's a decent chance it'll hold through, is about 40,200, give or take some points. We're currently right now at 39,400 and some change points. Now, for the next few trading days, or specifically for tomorrow, it almost looks like it'll be consolidating. The channel will be consolidating on, for the most part, potentially, if it does consolidate, it'll be pretty much between this moving average, about 39,000 and some points, to the 39,650 points, give or take, for the most part. And then head up to the upside again, about 40,200 and some change points. But before we do get to that, we will have resistance about the 39,878 points, give or take, so some change. And then if you think it's going to head to the downside, besides the moving average I gave earlier, the second moving average, which coincides with these two, is about 38,837 points, give or take. And then this one's about 38,198 points, give or take. Obviously, there'll be more support on the way down, potentially. Like, for example, that could be a support level, but I don't see other touch points coinciding with it, so maybe not. But yeah, that's basically it for today's video. Thanks again for watching. I do appreciate it. If you guys did find it beneficial, consider dropping a like. It does help the channel, so thank you so much for that, and I'll see you guys in the next one. Peace.